credit score, and owning a home.
But first, let's hit it. Hi, it's Ali Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, please subscribe in our channel and get notified.
Honestly, you can contact all the time at 252-327-3357. We love talking to you. Do not be shy. Also, don't forget to get our buyer's guide and seller's guide in the description below. We have put a lot of information. We took our time to really make sure that these buyer's guides and seller's guide had information for you on how to start your home buying journey or home selling journey, and we want to make sure that you grab them so you understand all of the things, because just because you bought a home once before doesn't mean that you've ever sold a home before. So, and then vice versa, if you've never owned a home, you should definitely be reading the buyer's guide. So we put lots of information there.
And many future homeowners really are concerned about their credit score when they're trying to get to the realm of purchasing a home. No?
Right. So, I mean, that's 100% true. The reason people don't apply for mortgages is because they think my credit is bad. I'm not going to lie to you. I used to have that fear myself. I was afraid of my student loans at the time. And I thought there was no way anybody was going to give me a home mortgage because I already owe $300,000 in student loan debt. And I was just thought that debt was too high to ever qualify for a mortgage. So I'm just telling you from a personal experience, but by talking to a mortgage person, sitting down and putting my grown-up pants on and taking control of my financial situation when I didn't own anything other than all this debt of student loans, it really made me understand what I needed to do to be a homeowner. And it did take us a year or two in order for me to get everything in order, but it was one of the best journeys I ever did because I understood what I needed to do with my credit.
Exactly. And also we wanted to emphasize really the importance of timely payment. Like a 12 payment that you made on time can positively impact your credit rating.
Right. So by having your regular monthly payments, you are improving your credit score as well. Now, you absolutely, when you are buying a home, need good credit, which is what I was talking about. Of course, the higher the score, the better chances for loan approval. They care about the credit score, they care about debt, and then they care about income
or assets.
Those are the three things they care about. But your score is going to be a nice little determination.
And definitely, better credit score is a better chance of the approval and better term. That in our case means the good interest rate.
Now, again, we have a whole series on credit, which I'm very excited that we have. So you can watch that if you have any questions on credit. But basically, credit goes between 300, which is really horrible, to 850, which is the top. I know one of my clients is 850. He's the cream of the crop. He's getting everything. Why? What makes him better than my score? Payment history, debt, credit length.
Exactly. What else?
So those are the financial institutions all report to the 3 credit bureaus, and then the credit bureaus kind of give us this number.
And of course, in the other video, we mentioned having like a 3 to 5 different credit card.
Not credit cards, three different things, like a car, a mortgage.
I made a mistake. It could also benefit your credit that we were talking about.
Okay, so the really important is that they're going to look at that number for their lending decisions, and they're really caring about those payments that you've made, specifically when you're buying for a home.
Exactly. And definitely, as we said before, you need to be very careful about your credit balance, because if you go above 35% of what you're allowed, let's say your max credit is $10,000, you really need to understand that it's better to stay around 3,000 to 3,500. And using more credit from the balance of your credit definitely is going to bump down your credit score.
Now, understanding how all of that is really crucial. Again, we talked about timely bills. We talked about make sure that if you are checking your credit report as well, because there can be mistakes on your credit report. Credit errors can hurt you. So make sure that you're following along every month. Find out what's going on your credit, because credit bureaus make mistakes, and if there's a mistake on there, it needs to get gone, because you want to buy a house or you want to do something, and you want to make sure that your credit is yours and you take control, because taking financial control of your life is actually one of the best things you can do.
And if most of the banks actually, they offer that right now, that like, for example, Wells Fargo, Chase, they offer this credit checking every month, But if you really don't have that tools or your bank doesn't offer that service, make sure applying for the mortgage, at least you know that if something is wrong, you can fix it.
And also understand that your payment history is going to be 35% of your total score. Now, there are various mortgages available. We're going to talk about that. A lot of people don't like the one I'm going to mention first, which is, of course, your adjustable. That's going to be a lower rate that's going to change over time. I do have more clients choosing ARMs these days because they figure, well, in 5 years, the rates are going to be better or whatever. I'll sell it. That's their attitude. And that's okay, too.
And also, it's still, according to the term, you might be even in 6 months be able to switch it to FHA or conventional.
Right. Another type of loan that really a lot of our home buyers love is the FHA program because it is a government-backed loan.
Exactly. And they are stricter, but they're going to help people that they have a lower credit score, like a 580. You know? And in the state of North Carolina, we have a couple videos actually about that how you can get grant from the local government.
So make sure that they are paying on time. Everything is being reported. If it's not being reported, but you pay monthly, it's time to think about getting that. How do you get that on their credit report? Because if you're paying your phone bill every single month on time, but your phone isn't showing up on your credit report, how can that get on your credit report so you are showing a better payment history? So, and then some people might choose a fixed 15-year term, 10-year term, 30-year term, 30-year term, and then there's reasons for and against it as well. What about calculations?
Now we're going to talk about the calculating amount of the loan that you can afford to borrow. That here we actually talk about the factors like a credit score, interest rate, and income, and how to ensure that you have the loan affordability.
All those are fancy words for me. I'm just simply going to say all of that equals how they come up with my monthly payment's going to be. Exactly. And at the end of the day, I care about what that monthly payment's going to be. Can I afford it? Is it okay? Do I have to struggle with it? Or is this... And are there other options for me? What are my best choices based on that number I see that the mortgage people have given me? Should I pick the ARM? Should I take the FHA? Should I take the conventional? What are my benefits and how does it affect my numbers? So don't be afraid to ask your lender for a couple different number scenarios so you can see what is best fitting for you.
Exactly. That's why the loan estimate comes that all of them, they are obligated to give you the loan estimate, to look at all of the loan term in the first and second page of your loan estimate to understand what's going on with the loan that they're going to give it to you.
Now, just to talk about it, your credit, 12 monthly payments, as he was talking about at the beginning, definitely help you improve your credit score. Paying off any high credit balances is going to improve your credit score. So basically, what is the routine that people should have?
Basically, you should have financial habits, favorable refinancing terms, and better loan that gives you a better loan in the future.
So I hope you understand why it's still important to buy a home. We did talk a lot about credit because people get afraid of it, and that's their biggest thing. So that's why we have a whole series on credit if you're really worried about your credit. But I do recommend instead call us so we can talk to a lender.
Exactly.
Put you with the lender that matches what you want.
And don't forget to subscribe in our channel and podcast to support us.